get into it. All right. We're now in Learning Unit 4. Okay. I'm going to share my screen with you guys. Should be able to see it shortly. I see more people are joining us as well. Welcome, welcome, welcome. Okay, awesome stuff. So I'd like you guys to quickly turn to exercise 4.1. You're going to start with 4.1 in your textbook, or question 4.1. Question 4.1. Okay. Okay, I'm sure you all know this by now, but just be aware you guys have an assignment due for the 21st of September, which is next week, Monday. Very, very close. So let's get that done, okay? Let's make sure we have our CAS, all right? So get that done before you bother with the ICE tasks, because remember the ICE tasks are due for the end of the month, so you know. But if you have already done the ICE tasks, that should help you with your assignment. Because I know 2B is obviously on your bank recon and your creditors ledger, or your debtors, one of the two. Okay. But enough said. I trust we are all at question 4.1. All right, so let's get into this. Let's get into this. Okay. Okay, so let's look at the required. What are they asking from us there? Okay, sorry, my mouse just seems to be acting very slow. I'm not being responsive. All right, just give me a second. Let's just test something. Okay. All right, so I don't think it's the mouse. Yeah, I think this is application, but yeah. All right, let's just refresh that. Whilst we refresh that, no problem. Let's get into this question right here. Under the required, it says, show how the adjustments and closing transfers would be recorded in the general ledger accounts on 28 February 2008. And then second bit, they say, show how the adjustments and closing transfers were journalized before the posting to the ledger was done. Okay, as you guys know, we're going to start with how it was done in the general journal, and then I'm going to show you everything else. Okay, show the effect of the adjustments on the financial statements. Okay, we're also going to see the effects of those adjustments. Okay, just a recap, maybe for those who might have just forgot. Yesterday, or the day before yesterday, Monday, yes, no, Tuesday actually, sorry. We went through the theory of Learning Unit 4. And Learning Unit 4 is your financial statements, okay? We know that we produce financial statements at year end, okay? But before we can produce financial statements, we need to take care of all the errors, all the adjustments, okay? And depreciation, things like that. And then obviously also we need to then, after having done all those adjustments and amendments, right? We then need to then produce our post-closing trial balance, and then also we need to produce our financial statements. So unit 4 is all about those adjustments, okay? Right, okay. Just a quick recap there. All right, let's get into the rest of the question. All right, up top it says, the question demonstrates how we account for accrued expenses, prepaid expenses, accrued income, income received in advance. The following extract was taken from the pre-adjustment trial balance, all right, of Peninsula Store, sorry, on 28 February 2008, the last day of the financial year of the business. Okay, so there we have an extract from the pre-adjustment trial balance. You can see it's not the whole thing because we obviously then don't need all the other line items. Okay, then under additional information, a closer investigation on closer investigation, the following was discovered. Okay, first thing that we discovered is the investment into fixed deposit was made 1 November 2007, and all interest is credited to the current bank account. Okay, cool. So what I want us to do here, I think we must deal with adjustment after adjustment. Sorry, one adjustment at a time. Let me say it like that. So the first one here is they're telling us in this additional information that the investment in fixed deposit. If you look there in the table, your fixed deposit is the first line item, and that's for the 82,000. Okay, but here they're referring to all interest credited to the bank account. So here the issue is about the interest, okay, on this fixed deposit. Okay, so what we remember, we're doing this for the financial year end 28 February 2008. Okay, so we're only concerned with what happened during the course of that year. So guys, like we did with depreciation, we need to draw our timelines. Okay, we know that we bought, oh, sorry, we know that we bought this 1 November, so that's 11. This fixed deposit, or invested, should I say, this fixed deposit, 1 November 2007. And our financial year end is February, 28 February. Okay, you're going to be seeing a lot of timelines here. That's 2 and then 8. Okay, so very quickly, how many months is that? November, December, January, February. So that's 4 months. Okay, 4 over 12. Okay, all right. And here, what else do they let us know? If you look there, it also tells us that if you look at the fixed deposit in the pre-adjustment trial balance, you see that there's 16.5%. Oh my goodness, did I record? Did I click record? Okay, awesome. Awesome. Cool. So, what we're then saying, let me return to text so I can make this faster. We now want to verify, is the interest that the interest on fixed deposit, is that amount correct? If you look there under the nominal account section, it says interest on fixed deposit, 3,382.50 cents. Okay, so let's quickly see. Okay, we know that the investment was 82,000. Okay, so that's the principal. Then we're saying times, we need to apportion it because this was not for a full year. So 4 divided by 12, and then we're saying times the interest rate of 0.16, and what? They said 2/3, right? Oh, half. Okay, so 16.5. Okay, and what does that give us? Somebody quickly calculate that in the chat. Somebody please calculate that for me in the chat. Okay, I'm going to return to the screen so you can see the calculation. Okay, so we have that there. Whilst you guys are calculating that in the chat, I want to then move to the next adjustment. Okay, got quite a few timelines and things to do, so I obviously want to ensure that we try and get as much done. So if we look at the next additional information, it says a long-term mortgage loan was initiated on 1 November 2006. Interest on the loan is debited to the current bank account. All right, interest on the loan is debited to the current bank account. And 40,000 was redeemed, in other words, paid back on the loan 1 September 2007. Okay. All right, I hear something in the chat. Okay, thank you so much, Abigail. I also get that same amount of 4,510. Okay, so let's quickly see now. Just gonna copy and paste that. Okay. Now, the next question that you have to ask yourself is the following. Can you see this 4,510 is more than the interest on fixed deposit that we see in the pre-adjustment trial balance? Can you see in the pre-adjustment trial balance, we have an amount of 3,382, okay, and 50 cents, okay? So we then need to calculate the difference. Okay, so maybe we should have just finished this off before going into the next adjustment. So our minds are not all over the place, so my bad on that one. Okay, so let's quickly see. Hey, where's my calculator? Okay. I think that sounds like somebody already has that for me. Thank you very much. Okay, so I see you guys have rounded it to the nearest rand. Okay, let's actually do to 2 decimal place, because I see that's how the answers have done it. Okay, so let's do that. Let's do that to 2 decimal place. Okay, so this is the answer we should get, but thank you nonetheless, Kalam, and thank you, Sepang. Appreciate that, appreciate that. Okay, so we have now, can you see there's a shortfall of 1,127 rand and 50 cents. Okay, so we know that we need to account for this. Okay, we need to account for this. All right, it means that we are owed interest. Okay, because remember we were supposed to receive 4,510, but what we have in our books is 3,382.50 cents. Okay, so that means that we are entitled to more interest income, or interest on fixed deposit, should I say. Okay, right. So we would then call this what? Somebody tell me in the chat. This is accrued what? It's money that is owed to us. So what would we call this? Accrued income. Thank you very much, Kellam. Exactly that. So I'm just going to quickly write that here, and then we will see how to deal with that after we have dealt with all our adjustments. Okay? Right. So that's the first one. We've dealt with the first one. We'll leave that there. Okay? And this is obviously pertaining to fixed. Let me say interest on fixed deposit. Let me just put dip. Okay. Right. So now I want us to move on to the next one. I already read it. So let's just jump into drawing the timeline. Okay. Okay. Right. Cool. Ready to roll. So we have, when did we the mortgage started was initiated on 1 November. Seems like a lot goes down in November. 1 November 2006. Okay? But remember, we're not interested in this financial year because look when this financial year ends. It'll be 28 February 2007. Okay? So we're not interested in this period. Okay? But we are interested in what happens after here because this is now, let me do this. Our year end is here, 28 to 8. Okay? But we know they said something interesting happened on 1 September 2007. Okay, so that's somewhere here. 1, 9, 7. Okay, so what happened here? Here, 40,000 was redeemed. In other words, we paid 40,000. Okay, 40,000 left our bank account. Okay, I'm just going to put a P for paid. Okay, okay, we paid 40,000. Okay, but if we look in our books, okay, so one thing we also know is that throughout this period, the interest rate, okay, is, what do they say there? For mortgage loan, it's 19%. Okay, so let's just quickly jot that down. 19%. Okay. What else do we know about this mortgage loan? Is that its total value is 260,000. Okay, but that information, remember, we're taking it from the pre-adjustment trial balance, and that pre-adjustment trial balance was here on the 28th of Feb. Okay, so this 260 is the balance of the mortgage on 28th of Feb. Okay, so now you begin to ask yourself, so why did they tell us that we paid 40,000? Okay, why did they tell us that we paid 40,000 on 1 September? Okay, if what we have is 260 on the 28th of Feb, all right, 2008, then what was the balance on 1 September 2007? If we paid 40,000 here, and therefore our balance is now 260 here, what was the balance before we made this payment? All right, before we made this 40,000 payment, somebody tell me, how much were we owing? 300,000, okay? And how did you get there? How did you get this 300,000? I kind of just answered. The 40,000 plus the 300, okay? So what we're looking to do is we're saying, okay, this 260 plus the 40,000 would then give us a total of 300,000. That's how much we were owing before we made this payment. Okay, I hope everybody is following how we're arriving at that. Okay, because that's why they told us about this amount. Okay, now we ask ourselves, okay, cool. Remember, we want to verify how much interest should be owed as a result of this mortgage loan. What is the interest on the mortgage loan? How much is it supposed to be? So in other words, remember, we're only interested in these two periods, and I can call this A and I can call this B. Okay, see, timelines are not going away anytime soon. Okay, so let's go. Let me go back to to calculate this. Okay, so we're saying here, we are saying for A, 300,000, because remember, from here, 28 Feb 2007, all the way until the 1st of September, okay, we had a balance of 300,000, because this period we were owing a balance of 300,000. Okay, and only after the first, or from the first going onwards, are we owing a balance of 260 because we had made payment of 40,000. Okay, cool. Just want to reiterate that. So 300,000, the principal that was owed, then times our interest rate of 19%, 0.19, and then times how many months is this? Okay, so we're starting in March, April, May, June, July, August, September. Okay, so I've got 7 months. Am I right? Am I right? Okay, I'm not sure if I'm right there. Let's recount. Because I wrote down 6. So that's why I'm second guessing myself here. So let's recount. March, April, May, June, July, and August. Yes, you're right, Callum. It's 6. Why is it 6? Because can you see this is the 1st of September. So we do include the whole of August, but we don't include September. So I see now what I was doing wrong. I was including September as well. All right. So thank you for that. All right. So 6/12. Okay. You need to apportion it. So that someone can quickly calculate that. I'm going to write out B's formula or calculation. Remember at B, we're talking from 1st of September all the way until our year end of 28 Feb 2008. So here we're saying, okay, 260 is what we were owing at that point. Yeah, and I heard something go off in the chat, so I'm sure someone has an answer for me for the first one. All right, times 19%. Our interest rate hasn't changed, okay? But this time, how many months do we have? We have September, October, November, December, January, February. Okay, that's another 6 months. Okay. Okay, so what do we get there? All right. You guys can quickly calculate both of those. All right, all right, all right, all right. Yes, thank you very much, Lee. That is 100% correct. And I'm looking at what I got for B column. That's also 100% correct. All right, thank you, guys. Thank you, thank you, thank you. Let's keep on with making it as interactive as possible. Okay, so let's see here. Let's just paste that over there. And I think this was 24, sorry, 700. Okay, so we now have the two interest amounts. Okay, and then if we quickly add those two together, I'm just going to write it out so people can easily follow when we watch the video. Okay, we get a total of, should get 53,200. Is that what you guys are getting? Let's see. Thank you very much, Lee. 100%. Okay, right. So we have that there. Okay, now can you see we're the ones this time owing? All right. If you look at how much do we have there in terms of interest on mortgage loan, okay, we have 49,000. Okay, so there's a discrepancy again, 49,083 rand. So how much do we still owe for this financial year in terms of interest on our mortgage? How much do we still owe? Because remember, we've only paid 49,000, but here, according to our calculations, we should have actually paid 53,200 for the year. Okay, 4,117, 100% correct. Okay. Okay, I see our numbers have increased even more. Welcome, welcome. Whenever you logged in, more than welcome. We're doing question 4.1. Okay, so this 4,117 is now what we then need to record in our books. We want to record the discrepancy, the shortfall. Okay, so like I told you, accrued simply means someone owes someone. So this is accrued what, guys? This is accrued what? See what the people are saying. Thank you, Callum. Thank you, Abigail. 100% right. It's accrued expense. We owe this money. All right. We know that interest expense is obviously an expense. We haven't paid this expense, but we still owe it. So we're calling it accrued expense. Okay. And this is obviously in relation to interest on mortgage. Okay. There we go. Okay. Cool. So we've dealt with the second adjustment there. Then we move on to the next additional information point. Okay. Guys, and you're going to draw timelines for all of these, eh? Very rarely will you not draw a timeline. Okay. In fact, I would encourage that you always do, just so you get the full perspective of what's going on. So if you can't do timelines, there's a good chance you might struggle with these. I'm not going to say the worst, but yes, be very cautious. Get your timelines together. The salary for March 2008 on an employee, Faith, has been paid already, 7,000. Okay, guys, again, what financial year are we looking at? We're looking at, I should actually say 1 March here. Okay, 2007, all the way until 28 of February 08. Okay, but we are being told that we have paid for the month of March. Okay, we are paid for the month of March as well. So you can actually, I think March, January, February, March. Okay, so March should have 31 days. Okay, so what is the problem here? This is our financial year, right? This is what we're interested in recording. Can you see that this falls outside of that? 100% Abigail, this is a prepaid expense, okay? We've paid for an expense that, yes, we're going to pay for, but we paid for it in advance because we're here at the end of the financial year. So, okay, we've already identified this 7,000 to be a prepaid expense, okay? But then how do we treat it? Or in fact, okay, no, it's fine. Yeah, what? Let's go there. Let's go there. So this 7,000, we need to make an adjustment for it. We acknowledge it's a prepaid expense. What would then happen to it?
So, with the 7,000, wouldn't you just divide it then? I don't know how you do it, but wouldn't you just divide it into the 2 periods because you've overpaid by 1 month? I'm assuming.
Why would you divide?
Just to get rid of the amount that isn't in the financial year we're looking at. And then you
Okay.
minus that from the 7,000 to get the prepaid expense.
Okay, so say that again, that last bit.
So you divide the 7,000, but I'm not too sure about what because they're paying per month, not per year.
Uh-huh.
So then you'd have to
Okay.
divide it by 13, not 2, I think.
Okay. Right. So I heard something's going off in the chat, sorry. We don't include it when we record. Oh, yes, he's right. I made a mistake, sir. Ah, Abigail, you're actually on the money. Okay. So Kellum, you actually said it, but you also were just shifting a bit in terms of dividing. We don't need to divide anything, okay? What we need to do is, yes, remove, in other words, deduct this 7,000 from what our our wages and salaries is. So let me explain it this way. Let's do this. Let me do this. Let me do this. This 78,000 that you see in your in your pre-adjustment trial balance, 78,340. Okay. Okay. And I want to highlight that. I want to shift that up here and let me highlight that in yellow or something. Okay. That, and I'm going to use, let me use green. This 78,340 is for this whole period from the 1st of March all the way until the 31st of March 2008. From the 1st of March 2007 all the way. Can you see that? But we only are interested in up to the 28th of February. Okay? So to rectify this situation, what we then need to do is we need to say, because we're only interested in salaries and wages for the financial year, okay? We then say, okay, cool, no problem. We know that the extra amount that was paid was for March, okay? And we know that amount to be 7,000, so we're going to say negative, removing that 7,000. We want to remove that 7,000 from what we have, okay? And that's what our salaries and wages should be. So since we're already here, we might as well calculate it. It should be 71,340. Okay. Does that make sense? Are we together? Okay. All right. Thank you so much. All right. Thank you for that, guys. Awesome. Okay.
So, just a quick
Yes.
question. If that
Mhm.
question specifically was about one employee, so we're speaking about one employee being paid extra, like a month in
Yes.
advance, would you then just take the amount they give you and divide it by 13, and then you minus the 1 month from the 12?
So yes. So if they had not told us the amount, so for instance, and you're going to see this because we will do another other exercises. So for instance, they hadn't told us this about the 7,000 being what was paid for March. So they'll just tell you, for example, in the additional information, they would have actually structured it like this. They would have said, we have paid salaries and wages for what's this lady's name? For Faith, okay, for 13 months, for example, okay, for 13 months, all right. Then you know, okay, our financial year is always 12 months, so there's an extra month in there, but they haven't told us how much extra we've paid. So all you know that is that your salaries and wages is having a total of 78,340. Okay, so then you say, okay, so how much am I paying this individual every month? That's when you would have to divide by 13 to say, what is my salaries and wages to this person every month? Okay, let me just quickly get my calculator. So 78,340, then divided by 13. Oops, what do we get? Okay, so that's what we get. The salary is 6,000 and 26 rand. Then you would take this amount and you would say, we only want for 12 months for the financial year. And then you would say times 12, because this is what you should have in your salary and wages. So can you see it becomes 72,313. Okay, right. I hope that answers your question. So it's all about the information given. All right, no problem. Cool. Good question. All right, but we will see that later as well. Okay, so I'm just going to erase that. Okay, so now we've dealt with that. Now let's go to our last. What's the time now? Let's go to our last adjustment, and then we'll start filling out the adjustments, I think, after the break. So the last one they say The tenant has been in the building since 1 December 2007 and has paid her rent for March and April already. No deposit was payable upon occupation. Again, we need to quickly do a timeline just to see what exactly is going on here. Okay, so I used blue there. Okay, so let's use black. So when did the tenant come into the building? 1 December. So 1/12. All right, 2007. And we're interested in, again, February. Okay, 2008. But they tell us that they've paid for, let's see, has paid rent for March and April 2008. Okay, so let's just say, okay, 31, 3, okay, and then also, I think, let's just put 30 there. Yep, it should be 30 days, and then 4, okay, and this is for 2008, okay. I won't put the 8 there because it's just going to take up space. So again, can you see this portion is outside of our financial year, okay? We're only interested, let me use a different color for that, in this bit here, the bit in red, okay? From December all the way until Feb, okay? So we have, okay, how many months do we have here? We have December to January, okay, that's 1 month. Okay, then we have January, the whole of January, that's another month, and then we have Feb. Okay, so let me do this. 1, 1, 8, and then here obviously this is 1, 1, 2, and then 8. Okay, so here we have 3 months that we're interested in, but here there's an extra 2 months that they've paid. And I think that's what someone was trying to highlight in the chat. Okay, so how did we get to this rent per month, which is what we want to begin to calculate? Okay, so we know that this is a total of 5 months, right? Okay, and this is where your thing applies that we've been that I was explaining with the different type of rent expense question. But let's get into it. So we don't know how much rent is being paid every month. Okay, we don't know. Okay, Kellum, I'm sure you arrived there at the right answer because it seems to be aligned with mine. But I want us to get through this together. So we have 5 months in total here. We know that our rent expense, according to our pre-adjustment trial balance, you can see it there. It is 22,750. So then we say to ourselves, okay, how much was the rent monthly? Okay, how do we get that? We know that see what you guys are saying in the chat. Yes, 100%. We're saying we know that the total rent that was received was 22,750. We know that he stayed for or is paying for a total of 5 months. Let's say that he's paying for for a total of 5 months. So we have to divide the 22,700 by 5. Okay, let's do this. Question mark. Okay. So at column there, highlighted 750 divided by 5, and that obviously gave us the monthly, which again is the 455. Sorry, 4,555. Okay, Again, we're only interested in these 3 months. So the rent that we should have, the rental income we should have, will then be this 455 times, that's what we should have, okay? Another way to think of it is that means that we need to remove these 2 months out, okay? Because that's outside of our financial year. So you can say, okay, what is this amount, okay? Which, Callum, I know you calculated earlier. We're saying 2 months times the 4,500, and we will then arrive at the 4,100, which you calculated there, okay? So I just wanted us all to understand how we have arrived at that 4,000, sorry, that 9,100. Okay. Is everybody happy so far? Are we together? Okay. If you have any questions, guys, by all means, please switch on your mic. Let's discuss, let's dissect what's going on here. So this is in relation to rent income. Okay. Right. This is in relation to rent income. But now, what do we call this 9,100? What is it? What is it to us? Remember, here we had prepaid expense. Over here we had accrued expense. Over here we had accrued income. What is this? We've received income for months outside of our financial year. What do we call this here? What's the other account that's affected? It's income received in advance. Okay? Income received in advance. And this is why I was telling you guys on Tuesday that it is critical that you understand not only what these accounts are in terms of when to apply rental income received in advance or income received in advance, okay, but also that you know these account types. Okay, so we need to know, what is this? Is it a current asset, current liability? All right, what is it? Okay, etc. Okay, but we know this is a current liability. We spoke about that. I'm sure there's someone reaffirming me. We will see. We will see. All right. I'm glad you feel that way, though. Okay. I think this is very interesting. So you will enjoy it. We will all enjoy it. Okay. Right. But anyway, guys, it's time for your break. We've dealt with all the adjustments, all right, that need to be made. We've got the amounts for the adjustments that need to be made. Now we need to figure out, how do we record these in our books? Okay. So please, let's take our break. Let's get together again at 9:03. Okay. And let's get together back at 9:03, and then we'll finish off this, and hopefully also finish off question 4.2. Okay, so I'll see you guys in 10. I'm gonna start at 9:03 sharp.